So everyone tells in my mirror market concept, okay, we understand that this is a rat trap. Okay, this is an W over here, and this is a rat trap. This is a parallel channel. Then this is a fake move. From here, we are going to make a targets. But targets, stop loss would be very big. If I take a stop loss of, suppose in money we would, of $1, and my pending order would be over here. Okay, absolutely, because first thing, in rat trap we are going to use this uh, first green candle, W's first green candle as an reversal. So let me mark in middle line. Okay, then firstly, see, if you are going to trade, you cannot risk. If you are going to buy over here, you cannot risk $5. Okay, you cannot risk $5. So what we are going to do, look here, look closely. What is this whole candle telling about? This is an D grade alarm. Okay, what is meant by D grade alarm over here? See, if the wick of upper side is smaller than the wick of the below candle, then the wick which is longer will win, then pushes the market towards upside. See the pattern. Absolutely, the pattern would be in this structure. Okay, upside down means over here we are going to have an wick over here. Even we are going to have a wick over here. We should have, and the structure would be similar. We should have an upper wick over here. We should have the lower wick. I mean second wick over here. What I'm trying to say, the intermediate traders can understand. Then after, if we have this and larger wick, then this would win. Market would go. Market would provide and demand. So we are going to use this one. So firstly, what we are going to do, how we are going to make in trades. So firstly, we are going to target over here. First, we are going to wait for an opportunity. Let the market make its move. Okay, suppose we are over here, then market taps at our zone. Then after, we would wait, and we would wait. Okay, now we have got a D grade. Then after, we know that which has larger wick and where the market is going to provide demand. Then after, we are having an hanging man. So right now, in this in after after the first candle, we are going to place a trade, okay, of $1. Now it might take $1, $2, $3, but this is the way how trading works. You know, when we talk about a risk management, okay, firstly we have got an this particular type of inverted hammer. Okay, so firstly, when we got an inverted hammer, we are going to make trade over here. So our trade would be from here to inverted candles low. This should be our perfect trade. We are not going to risk so much. We are going to have a little bit of, just a little bit of small SL. Okay, and we're going to wait. Now, why I'm telling you that our SL should be small. Look over here. How the market has been provided demand. Demand is instant demand. We got instant demand. It's not a bending demand. It's an strictly the market is following an instant demand. The market has provided an instant demand. So quickly the demand has come. So there are chances that the quickly demand might come. Okay, absolutely. You know this law of mirror market concept. So we are going to place a trade over here. I'm going to make a trade in this way. Okay, now right now we are going to take the demand from the previous demand, but then after we are going to apply here. We are going to copy this in case we get volume burst. but volume based is at another level. So we are saying that we would firstly first target would be this. The first target is being smashed. Let me make a QFL box over here. This would be our QFL box, and this would be our target. Not we are going to not target over here, little bit below the QFL box. Okay, over here first we would have 1:3 ratio. We would achieve about $3. Then after we are going to target at the double if market does not give any sign of reversal over here. Okay, so in that case our second target would be somewhat here. We are going to make an targets until here. Okay, let me pull this risk to the ratio. Now let the market moves. Perfect. We have hit the target. The market did not market made an IFC candle, so no need to worry. The target has been smashed. So in this way, yes, I agree that Candle King is teaching you the analysis, how he does analysis, and how market works, how we should analyze, how we should have perception. But I am going to teach you about how to track trades. Okay, how to manage your trades at a particular minimum, very minimum SL, and larger risk is to reward is to risk ratios. So I'm going to again upload the videos of another. Even I'm going to tell about volume burst, I'm going to tell about Blu-ray, I'm going to tell about all kind of CCPs. I'm working on this because even I have to master on these things in order to make money. See, there will be a time, this kind of strategies are going to be very useful in your future. If you take one lot, if you make a little bit, if you have what we call prop firm, the prop firm provides an the fundings. Okay, if you risk 1% over here, you can make easily, you can make easily 10% in one trade, up to 6 to 7, more than that. This kind of trades. Why? Because you know that the market has been providing instant demand. So here market is going to be providing instant demand. So yes, I agree that not every time it works. Absolutely, it is trading. But if you understand the particular candles wick and pressures, at that point you can trade on those things.